Bank of America is out with a bullish note on the financials, telling investors to stay overweight that sector despite the inversion of the yield curve. Financials are one of the top performing sectors today. Made it our call of the day. Liz Young, what do you think about the financials here? Okay, I like the note is interesting. Part of it is fairly counterintuitive. In the 1990s, the S&P 500 banks earnings were 80% correlated with the yield curve. Correlations dropped to 17% since 2000. And today, our banks team cites the short end as more important than the 90s. Historically, financials have outperformed 50% of the time during curve inversions like the one you're calling for.
Yeah, so 50% is not a good probability. That's like flipping a coin, right? So I don't know that I'd hang my hat on that. But usually financials are correlated with the long end of the curve. Recently, they've decoupled from that. That's because the entire curve moved up and there wasn't a steepening in the yield curve. So we've stayed quite flat. If the curve inverts, usually following an inversion is a pretty quick steepening. So financials would benefit from that. Also, let's move through the year. Think about the idea, first of all, that financials are not overbought here. So this isn't a place where I feel like the market is frothy. And if consumers start to run out of that excess savings, they're going to start to borrow because they still have demand, as we've all been talking about. They still have demand. They're going to start to borrow. They're going to have to borrow from the banks. And they're going to have to borrow in an environment where rates are higher. So I still like financials here. I think they're cash rich. I think that their balance sheets are much healthier than they were in previous recessions. And I think that they're an okay place to stay.
Pete, you bought more B of A calls.
I did, and I agree with everything that Ms. Young was just talking about. I think it's phenomenal that there's some opportunities that are still there, Scott. I think, I love J.P. Morgan. I know that the desk oftentimes loves J.P. Morgan, but they were way too overpriced at one point in time. They were trading 2 times book or more. So I think it's finally getting into the area now where it's a little bit closer to Bank of America. But Bank of America and Wells Fargo, I think you get a little bit more bang for your buck with those names, and you have been getting that. All you got to do is look at the charts. Year to date, I think Bank of America is up 12% over what's going on with J.P. Morgan. So I think there's just it's an issue where you got to be selecting the right banks. And I think there are many of these banks or financials, if you will, that are still in a great position to go higher. I think Liz is right. And I own Bank of America. I've got some Wells Fargo. I've got more bank exposure than probably I should. So I probably will start to trim at some point. But right now, I think that there's a bit of a slingshot effect right now with Bank of America to the upside. That's what the calls are telling me.
Quickly, Josh, J.P. Morgan really hasn't been the same since it reported earnings.
Yeah, I mean, look, this is a stock that tends to move in spurts, and it's really tough to time when the next one will be. I've seen it go up 30 points in the span of weeks. I've seen it go 9 months without going anywhere. So I think with J.P. Morgan, I've always said that I'm an investor. I own the stock significantly lower. The dividends automatically repurchase more shares of stock when they get paid. And from one quarter to the next, I'm really not going to change my mind on what I think the opportunity is. We're basically in a situation where I think with every passing year, we add trillions to the size of the U.S. economy. I think no matter what happens, what areas the economy grow, J.P. Morgan Chase will have an important role in that growth. I think they've done a really good job fending off competition from fintech firms. I think a lot of those fintech firms that we thought would supplant the traditional financial system probably run out of money in this cycle. So JPM is like a loading the animals onto the ark. When you put capital there, I think you could feel pretty good about it. You might be bored, but I don't think you become permanently impaired, really, no matter what happens.
Not bored this week, up nearly 8% for J.P. Morgan.